everybody. This is John Blank, Zacks Chief Equity Strategist and Economist. Today is Monday, July the 1st. And today we're going to go through the 6 industry industrials sector. So Zacks industrial sector will contain these 6 industries, and great subject for cyclicality. It's been a sector that I have personally kept the tilt on for some time because I think it does have some support also from the government in the terms of its fiscal policy for infrastructure. So as usual, we're going to go through this in a 3-part sequence. And I like to keep this consistent across these reports to you because you can now rely upon the information in these 3 sections in the order that they are. So part 1 will be the top stocks in industrials by market capitalization. Part 2 will be the top stocks by the maximum number of covering analysts of that company. Obviously, these are the 2 big ones for a major industrial sector like this. But what I find it very interesting this time around to use also the largest 1-month % change in current fiscal year EPS estimates. That's the Zacks Rank content here. A little more short term, but also we're going to catch some cyclicality in that number. So here we go with Zacks top stocks in this industrial sector. Of course, the views of this discussion today is just mine. I do have a PhD, and they are not necessarily the views of Zacks Investment Research. I'll let you read the rest of this at your leisure. So as we always do, we're going to go through, first of all, the tickers, the company names, and the market caps. I want to point out to you what needs to be understood here. This is the market capitalization groups. Here are the industries. Oh, there's 6 of them. You can see containers and glass is 23, industrial product services 24, machinery 26, and so on. Here, this is the largest 1-month % change in estimates. And this is the maximum number of analysts. So market cap, maximum number of analysts, and in the center, that largest 1-month % change in estimates. So always come back here. Obviously, this is a use in the first section. This will be used in the second section. This will be used in the third section. But always come here first within the tables. We were going to in the charts. It'll be containers and glass, and then, of course, over to the 6 companies or 5 companies for those areas. This is the critical go-to slide. Always keep this one front and center in your thinking and come back to it. Number 1, top stocks by market capitalization in industrials. So the first one off, of course, will be return on equity. What I want to point out here is it's really different for the 6 industries this time around. However, you're going to see certain industries, in this case, industrial products and services. That's W.W. Grainger up there, just killing it. Cintas is here too. These types of companies have really come out of the COVID pandemic in nice fashion, and particularly after the passage of the Infrastructure Act in 2022. You can see that lift up there. But it's also true for electrical machinery and machinery in general. One of the interesting supply shock events here is metal fabricating, which you can see it came up strong just as COVID was ending and then came down. That's a supply shock effect. Pollution control really didn't show a lot of cyclicality. It's not one that was affected as much by the COVID pandemic. Containers and glass, machinery, electrical machinery, and industrial product services, clearly cyclical and coming up right now. So once again, go back to that table, look into these tickers for their industry by the largest stocks in the market cap space, and you can pick these guys out very nicely that are doing better than others. Illinois Tool Works is one right here that you can see. That's Caterpillar. There is Deere below it. Excellent stuff here. Always return to this at your leisure at some point in time. So the revenue forward 12 month. Again, we're going to have the same order here in the same space, but this is revenue. Again, that gray line is the COVID pandemic. There was a 2008 financial crisis, obviously a lot less. But again, you're seeing this nice cyclical move. And for example, here you can see CAT has been rising, but it's not quite yet back to its previous high in 2012, whereas Deere has rolled over sometime about 6-8 months ago, but still quite high. Plenty to learn in this whole space. Tetra Tech, of course, is the top revenue forward 12 months. You can see that it has just been cruising along. Nice growth stock there for you. And of course, over here, there's Mitsui, the Japanese metal fabricator, Tenaris, which is down in Argentina, and there is Alcoa, metal fabricating. All kinds of information here, all kinds of tickers to learn. Great stuff for you to review. So once again, we're going to go first through the return on equity. That's the bottom line, and now we'll go to the top line with revenue. Okay, carrying on. Capital expenditure. I put this one up here because clearly the case, the capital expenditure is cyclical. And I think that is the key point we want to look into here over and over again. Lots of different patterns here, but we want to see companies that are actually investing back in their businesses and doing it well. And of course, here is Caterpillar, what I just point out to you. They really have been increasing their investment in the last 2 years, and that's what you want to see. Important material to get through. Down here, you can see another nice cyclical upswing in CapEx and CWST. Don't know that ticker off the top of my head in pollution control, but that's clearly building a growth stock. So when you see patterns like this, go back, find that ticker, and go to Zacks.com and learn more about these companies in these areas. I like these sector things to learn new companies, new picks, new ideas. That's where you can get some traction from us. Okay, the reinvestment rate. If you're going to reinvest in capital expenditure, you want that to be high and growing, because that means people are believing that the profits they can plow back into their industry are going to benefit them. GWW, Granger, of course, powerful. Cat, doing great. But again, look for these other names that you may not know as well and check them out. Here's Graphics Processing Corporation. Probably don't know that one, but it is doing well in containers and glass. There's Ball Corp. Of course, you know that name quite well. Not doing quite as much. Always come back to these charts. Very helpful to learn the cyclicality, learn the better names in these given industries. Okay, enterprise value to free cash flow. This is valuation. Obviously, you can see from the charts, it's very noisy. So why do I put it in here? Because I want you to look in a rank order space here and here and here and over here and so on. So you can pick out the highly valued versus the less valued names within a space. Very helpful to understand whether people are pricing it up and believing in the growth. So actually, higher enterprise value to free cash flow would say that that is a growth stock. If it's lower, then the people are staying away from it. If it's too high overall, I would consider it a data issue. But in general, you're going to find some very interesting things here. For example, Ball Corp's on the top here, and other names that you may or may not know. Go back to our, again, first slide. That is the key place. There it is again. I just want to remind you, that is the slide that keeps this critical in all of this. So after we get through enterprise value, we get some earnings pureness. I don't generally find this to be terribly helpful, so I put it at the back. I've also put total debt charts here at the back. Not as helpful a story for you as an investor. Finally, depreciation and amortization, also not very helpful. So again, if you're going to focus in this sector, I really would spend my time here on return on equity, here on revenue, here on capital expenditure and reinvestment rate, and then finish up just with the enterprise value to free cash flow. The first 5 slides in this particular pack are where the action is, and I've ordered them for you in a manner that should be helpful to your efforts. All right, top stocks by market, maximum number of analysts. Should be helpful here to do this because these are well-covered sectors, and of course, we'll lead off with the profit margin. Again, what I'm looking for here is some evidence that people are doing better than their peers in a profit margin context when we sort out these names. But again, we're sorting these names out now by the maximum number of analysts. So again, you're going to see, so for example, TS Tenaris doing quite well, their profits down there, and Cintas, a great name. It's been a long time player, holding up on its profit margins quite well. Emerson Electric down here is clearly doing quite well with their business. You want to look into that later on. This is very helpful. So from net margin in the maximum number of analysts, I've gone to return on capital. Again, this is kind of like return on equity, return on capital, a little broader definition. But a great slide for cyclicality and following through on the net margin to the return on capital will help you out in picking one up. Look at this guy, AOS. Don't know that ticker, AO Smith. Great company. I have had it in a large cap trader at times. Done quite well, as you can see. It obviously should be a pick for anybody. Again, nice to see some name pop up that was hidden from us in the prior set of max market cap stocks. Switching the maximum number of analysts really does help bring out some names that we didn't otherwise see. All right, so then we get to price to sales. This is valuation. Much like enterprise value to free cash flow, this is a different measure of valuation, but again, quite helpful to pick up where people are seeing that momentum and growing and believing in stocks and where they are not. And keeping this within a given industry is very, very helpful. So I've got all kinds of information for you across the board here. Look through the names, look through the patterns. In this particular effort, really, really need you to get the slides because there's so much information here. I can't get through it all in a discussion like this. All right, the dividend yield to the 10-year. Obviously, this measures whether there's really an income play for an industrial name, and you're going to find a fair number above one that do that. Otherwise, people don't, and they aren't really strong names for income relative to a 10-year treasury bond. So again, you're looking for patterns here and looking for ideas if you're an income investor right now. So growth stocks, obviously you're looking for the valuation a little more, and in dividend yield, you're looking for income. So there are plays for you in this industrial space on both. All right, CapEx to depreciation. I leave this kind of at the back of my discussion because it's not as relevant or interesting. Total debt to capital, same kind of situation. So let's finish up with the largest 1 month percentage change in forward estimates. This is the Zacks Rank, and it's what will give you the greatest conformity to what you see in our Zacks ranking at any moment in time, particularly now when we're talking the 1st of July, 2024. So earnings before interest and taxes. Great information here. Again, keep in mind that is your COVID pandemic. Look at this guy, ASAZY, just really cruising up the hill here. Never heard of that name in industrial products and services. Suddenly it pops out. In this particular framework, the largest 1 month percent change, you are going to see names that you don't know as well. That's the critical thing here. Go ahead and look them up. Find out who's at the top here. Find out who's building it up. That is critical information for you as an investor. Cash flow yield, also just like earnings, cash flow shows you if they're building cash flow percentages, they're also building their business in a profitable way. Great stuff for understanding here. Again, Emerson Electric just showing you the way from a cash flow yield perspective. We've already seen them in a number of slides do quite well. And again, that is all coming out of 22 through 23 and onward. They clearly are doing great in that business. I expect this is also a data center thing. The building of the AI infrastructure is clearly coming back to Emerson's benefit. All right, price to free cash flow. This is another valuation measure that you can use to decide growth stocks and other stocks. This one looks like the actual charts are of some value this time around. But again, focus mostly on these rank orderings within these industries. That is where I think the traction lies best, and you can get the most help from your studies of these groups. All right, so we're getting down towards the end here. Got enterprise value to sales. Again, we're looking at pretty much the 20-year data series, and look at this machinery electrical. That is showing you the boom in infotech really clearly. Look at how it's just growing. Very different pattern than you're seeing elsewhere. Very interesting to compare these across each other and look at the differences. It is really interesting to understand, what can happen in the container glass perspective, which is kind of a consumer staples type thing, versus machinery or electrical, which is backstopping industrial spaces, particularly data centers and infotech creation. Very interesting stuff for pollution control. If you believe their climate change and things like water are going to be very important in the future, get a hold of the stock, get a hold of the name, understand it better. You're going to be a better investor. All right. Again, put at the back total liabilities like I have in all three of these sectors, because I just don't really think there's a lot of traction in the debt stories at this point in time. Same for the quick ratio. Obviously, you just want to see these companies have a lot of cash on their balance sheets so they can handle a turn in interest rates, but it's not a big subject, and we shouldn't spend a lot of time there. All right. Thanks for attending. I hope you enjoyed this. This is really, in its detail, something you're going to have to get these slides from me and from Zacks Professional Services. So to do that, give us a call, 866-794-6065. Send us an email, strategycall@zackspro.com, or find us on the web at www.zackspro.com. We've also got a Zacks Professional Services page in LinkedIn and a Twitter feed at ZA Tools. However, for this particular one, given the sheer amount of data the 6 industries can provide you in this framework that I've shown you today, the 3-part framework, please give us a call, 866-794-6065, or send us an email, strategycall@zackspro.com. That's the critical information here. It's all about information provision for you as an investor from us as a company. That is our business. Go ahead and give us a try and learn about this. Like I said, a top tilt space that I do like a lot and have used in my services, portfolio services at Zacks for the last year. Thanks much, everybody.